Most traders lose money because they misunderstand one simple thing: support and resistance. Now, many traders have been losing money consistently on support and resistance. They don't understand what support really means and what resistance really means. They will just draw the analysis, and what's next, the analysis will go along the ones, or sometimes it will go the one they don't want. But one thing is, you have to understand what complexes mean. This is a place where touches have already touched multiple times, because there are three golden rules in trading. There are three golden rules in trading for you that you want to be consistently making money on this trading. You have to understand the support and resistance pieces. What are support and resistance? Support, it stands for like a floor. When price bounces, when price touch there, it's always bank up. Resistance is like a ceiling. That's when price touch there, it's always coming down. Understand these two will make your trading go easily. Now let's go on our chart. You see, this is our support line at the bottom. When price touched it, what happened? It went up, and when it touched the resistance, it still come down again. And look at the second times again, it repeats most of the time. But support and resistance basis, you have to understand how to find the best support and resistance too. Actually, I'm always using week, daily, 4 hour time, but level draws of the daily or weekly charts are way more reliable, because that is where the big players always trade. Most traders, like institution, that is where they always trade. But there are three golden rules for finding strong levels. In this place, rule number one is round number. So majority of traders right now, they don't understand what volume is telling them. They will just look at the market, draw the resistance, sometimes waiting for the price to touch the resistance without not even understand what the volume is telling them. Understand the volume is a very, very important thing. Second thing is that you have to understand the level and the structure when price break down. You are not all the time that break up is want to pull down. Whenever you see the round numbers on your chart, you have to mark them. They often act like psychological barriers where the market tends to react. The second rule is multiple touches. This is what I call conflicts. You look at our resistance at the top, you will see multiple touches there before you draw the resistance. That is place we are calling confluence, because price always reacts here multiple times. It's not just always once. Look at that, the support. The price reacts there multiple times, not even one touch, not even two touch. So that is real example for us. Look at the resistance too. This is like a ceiling, as I always say. The price always touch it here and come down. Look at the price that touch here and goes up. It even touch here and even come down. Look at the breakouts. This is where most big players always chicks away of the market. Actually, you understand the support and resistance, but you always do one thing, which is you lack what we call patience. You lack what we call confirmation. You don't only confirm your strategy. You don't only confirm your entry. You will just enter the trade randomly. Now let's talk about the third rule, which is sharp moves. Look at what happened. Price touched its support level and it went up massively. When price shoots or drills fast from a certain zone, it's reacting to a strong area of support or resistance. Your job is to draw your support or your resistance very well and wait patiently. Always wait for the confirmation before you enter any trade. This is where the big players always chase you away. Understand liquidity, understand the confluence, so that it will always give you the perfect of what you are doing in the market. Now that you know how to mark your levels very well, now what next for you to do? There are three simple setups for trading support and resistance. In this video, I will break all the setup for you perfectly. One is bands and reversal. You see what happened here? The price coming up touched its support level and move up massively. That is a bounce or reversal. It tells you that it's not the time for you to short the trade. It's just the time for you to look for the nearest support level and enter for the long. Understand the structure. When the price is an uptrend, understand. When the price is a downtrend, understand. Always look at the candle and always understand the rules what the candle is telling you. They understand the bullish hammer candles. Why opening, why wick, and then the closing. This is telling you that the this one is telling you that the buyer has already stepped down in the market. It's not a time for you to continue short the trade. Now it's time for you to long the trade and follow the rules. Set up your trade, put your stop loss, and wait for the price to touch your resistance. The second rule is breakout or continuation. This breakout or continuation, this always work like this. When your price is moving dramatically, going up, going, coming down, forming higher low and higher highs, you have to wait patiently. Let the price touch your resistance and wait patiently for the price to react. If the price rejected your resistance, that means the price is coming down. But look at this, the breakout is a very strong bullish candle and it's above, even above that resistance. Now the resistance have turned to support level at this moment. What's bias is for you to look for a long trade, not for a short trade anymore. The players are now playing long trade, they are not on a short trade. Look for the support, look for the support level and then mark your entry. Set your stop loss below the level of the support and take your profits at above the next resistance level. Now the setup number 3 is fake out or liquidity grab. This is where many traders are already always from the market. They will see little breakout, they will enter the market sharp that the markets have already break up the line without no confirmation. No, you have to wait patiently for the market to react. You have to know the type of the candle that is broke up the line before you enter. If it is the big bearish candle, you have to always wait for the candle to close. It can even close as the bearish, and even the second one will start and close at the bullish again. That is the continuation, and this is why many traders always hit stop loss fast, because you set up your entry and instantly you will even set your stop loss below where the price will touch your support level at instantly. But understand fake out. Always wait patiently for the first and second candle to close before you enter the trade. Not all the candle that is coming down is bearish.